Hello dear students, today we are going to solve question number 4, that is from final accounts 1. So this is a question is asked to prepare a statement of changes in equity. So let's see how are we going to prepare that. Before you see that, you should be knowing the format of preparing statement of changes in equity, right? So balance at the beginning of P&L account and SAMPA, you know the full form, right? In the previous problem also I taught you. Equity component, capital reserve, security premiums, retained earnings and other reserves, wherein this is your total. Now let's follow the question and solve the question. X Limited earned a profit of rupees 18 lakhs for the year ending 31st 3 2018 after making provision for depreciation and tax. That means this is profit after tax was 18 lakhs and 2,80,000 profit was brought forward from the last year. Okay, first let's see balance at the beginning of P&L, which is brought down. That is, this year they have brought down the profit brought forward from the last year, that is 2,80,000. That is the balance which we have brought down. So profit at the beginning of the year is 2,80,000. Let's write that is our retained earnings at the beginning of the year. 2,80,000 we should write in our retained earnings. This is the profit which we earned last year, which we have brought down for this year. Then we have current profit after tax. The current profit after tax, which is given by X Limited, earned 18 lakhs of profit. So let's write the current profit after taxes 18 lakhs. Okay. Now we have in the question, we have to follow all the items in the question. Let's say, see here. Next is the company's capital consists 2 lakhs of rupees 10 fully paid equity shares. Why he has given this 2 lakhs 10 fully paid equity share is he could have proposed some dividend based on your fully paid equity share. We have to pay some part of amount in the form of dividend. Okay, let's see this later. Now we'll see. Following recommendations on appropriations were made. So the first recommendation is to pay rupees 1,20,000 as bonus to employees of the company. First, out of our retained earnings, they are asking you to transfer to reserve. Okay, what and all we are going to pay first. First, in the question, he asked us to do bonus to employees. Okay, how much is the bonus to employees? 1,20,000. So let's less it out of our retained earnings, and that is our other reserve. Okay, he has asked you to transfer to other reserve. That means you are going to pay that in the form of bonus. So we have to write in both the columns. Okay, next head is to propose dividend at 12% on equity shares. Here we got the question. Now see here, do we have any preference shareholders? We don't have any preference shareholders in this question, but to equity shareholders we have to give 12% dividend to them. So on what basis you will give? We have a capital of 2 lakhs, each costing rupees 10 fully paid equity share. It's in 2 lakh into 10 you should do first. So that is the dividend which we are paying to equity shareholders. 2 lakhs into 10 will be 20 lakhs. So 20 lakhs 12% dividend would be 2,40,000. He has asked 12% dividend, no? It will be 2,40,000. This is the last one. This we have to pay out of our retained earnings. That means every year we make profit, right? out of our profit, some amount he is asking us to transfer into reserve, and some we have to pay him in the form of dividend to our equity shareholders. So when I calculated this, we got dividend to equity shareholders is 2,40,000. So let me write the second point, 2,40,000, which we are not transferring to other reserve. Instead, we will pay out of our retained earnings. Got it? Then come to the next point. Point A is over. We have paid bonus to employees. Point B is, we have to do the transfer to general reserve. So transfer to general reserve, that is 8,40,000. So 8,40,000 will write here. Okay, transfer to general reserve 8,40,000. Okay. Next, B is over. C is what? To propose dividend at 12% on equity share. Yeah, we have already done this based on our capital. 2 lakh into 10, 20 lakhs. 20 lakhs 12% is 2,40,000. That much dividend we have to give it to equity shareholders out of our profit. Okay, that also we have done. Next, point number D, to transfer 75,000 to staff gratuity fund. Okay, let's transfer to staff gratuity fund 75,000. Okay, 75,000 and 75,000. Oh, sorry, we should not add here. Just transfer it to our other reserves, 75 and 75. Next comes point E, to transfer rupees 60,000 to development rebate reserve. We will transfer to development rebate reserve 60,000. Okay, 60,000 to development rebate reserve. Then comes to transfer to 2 lakh to capital redemption reserve. Capital redemption reserve is 2 lakhs. We will transfer 2 lakhs capital redemption reserve. Then to transfer 60,000 to dividend equalization reserve. Dividend equalization reserve is 60,000. Okay, we will transfer it. Next comes to transfer 50,000 to debenture redemption fund. Debenture redemption fund is 50,000. Okay, I'll write here 50,000. So let's write here 50,000. Okay, then next, follow the question. Last one is to transfer rupees 60,000 to development rebate reserve. So we will write here last 8th one, development rebate reserve. Development rebate reserve, that is 60,000. Okay, 60,000 and 60,000 here. Okay, this now it completes your question, right? Now what we have to do is, first you add these two, 2,80,000. Okay, this side also we will put up the total. Both the sides it should match. Okay, whatever totals we write, both the sides it should match now. First thing, 2,80,000 we'll write here, 2,80,000. And we have current profit for the year 18 lakhs. That is 18 lakhs. We will write here 18 lakhs. Okay. Now you see 1,20,000 and this is transferred and paid. So this is nil. And 8,40,000 minus 8,40,000, this is nil. 75, 75 nil. 60 minus 60 plus 60 nil. 2 lakh nil. 60, 60 nil. We don't have anything here. That is an additional row. 50 minus 50 nil. 60 and this nil. 2 lakh 40, yes, we don't have anything here, means we can write the same thing here. Okay, 2 lakh 40 negative value. Now what you have to do is 2 lakh 80, 18 lakhs, and you add up all of this and you make minus of all of this, you will get the total at the end. That is the balance at the end of reporting year. Out of your retained earnings, you have paid all these transfers, you have transferred to other reserves, all of this, and we have paid our dividend to equity shareholders 2,40,000. If you have done that, whatever is remaining will be your balance at the end of reporting period. Okay, this will be 3,75,000. Okay, and if you add all of this comes to 14,65,000. Okay, this is 14,65,000. 3,75,000 plus 14,65,000, you have to get the same answer. And same ways, 2,80,000 plus 18 lakhs minus 2,40,000, you should get the same answer. So your final answer would be 18,40,000. This is how you should calculate changes in equity. This is the question number 4th answer. You can take a screenshot if you want the final answer. I have already shared the answers too.